Hi, I'm Nathan Garcia, and in this video, you're going to learn how to set up your Pocket Plan. So if you're just getting started with creating an account, connecting new financial accounts, or navigating Pocket Plan, then this video will be very helpful for you because by the end of this video, you'll know how to get the most out of Pocket Plan. So I'm going to demonstrate how to create an account using the desktop version for the individual. If you are an advisor, then you will have a separate video where I walk you through how to get started as an advisor and use Pocket Plan. So the first thing that you want to do is go to the Pocket Plan website. Either you were invited by an advisor using one of their marketing links, or you can just go to desktop.pocketplan.io. For this demo, I'm going to use Sandbox data to show you how the whole thing works. So once you get to this page, what you'll do is click create an account. From here, you need to enter some information in order to create your account. That includes your name, email, password. If you prefer to use multi-factor authentication so that you have a code that you have to confirm on your cell phone anytime that you log in, then I would encourage you to use Google or Apple in order to create your account. When you use Google or Apple, you're going to be able to log in automatically with your Google or Apple credentials. So we will be able to validate with either of those companies if you have a profile, and then they will send you the multi-factor authentication code. Great tool for you to have increased security and to speed up the time it takes for you to log in. So once you put in your information here, what you'll want to do is log in. And so if you are just registering, you're going to have to select which role you want. Oops, sorry, I need to choose a client here. And then you'll need to choose which program you want, whether you want the free version or the paid version. Yeah, you have access to the full software for 1 week. But then if you want your data to automatically update, then you need to go ahead and choose the paid version. So, oops. So now we have to go and verify our email address. All you need to do is just click on that link there. We just want to make sure that you are using the right credentials and that we're not sharing any information that we shouldn't. Now we need to go through the onboarding process here. This is really quick and easy to do, and it just gets some basic information that is used to build your initial plan. So we want to start off by telling what you're most interested in. What do you want help with Pocket Plan? It may be just managing wealth. You may want some help with investments, whatever the case may be. Next, we want to choose your birthday. So what I'll do is I'll actually use my birthday here, May 15th, and I'm going to just select that date. Next, you'll want to list your spouse's information. So I do have a spouse, so I'll list her name here and her birthday. And the reason this is important is because we are doing all the math for you for making sure that your plan represents your reality. So we're going to build a financial plan for you based on the information that you put in here. So don't just breeze by it. So when do I want to retire? Let's just say at age 65. How much do I currently make? Let's just say I'm making $1.25. And then how much of my current income do I want in retirement? So if I'm making $100,000 a year in retirement now, and I want 85% of my income in retirement, then that means that I'm planning to have $85,000 in retirement. The reason this is important is because we want to do the math for you. So give us a number, and if the number's too high, you'll find out. How much of your current income are you saving for retirement? This is looking at of your income that you stated a few cards back, how much of that is going towards retirement? And this can include your employer match if you have that as well. So I'm just going to say 10% to make things easy. How much money do I have currently in retirement? Let's just say I only have $100,000, and then let's hit submit. Now, the back end is doing the calculation for us in order to figure out what my retirement score is. Your retirement score is the probability of you not outliving your money before age 86. So the higher that retirement score is, the better your odds of not running out of money before age 86. Now, if you're like me, you might be a little disappointed by this 5 here on the screen, but that's okay because we're going to show you how to improve that retirement score going forward. But here on the My Plan page, you have your retirement projection. And this is going to show you your odds of not running out of money before age 86. Do you notice that there are 3 different colors here, a blue, a green, and a red? Each of those colors signals a best case, worst case, or median outcome scenario. So if you are more conservative and you say, hey, I want to know with the best possible outcome what my situation is, then what you want to do is you actually want to select which outcome you're looking at. So if you're very conservative, you would say, hey, I'm going to use worst case scenario because anything that's better than that is going to surprise to the upside. So worst case scenario, I actually run out of money at age 69. Now, that's not great if I retire at age 65, but what if I were to retire, maybe I retire a little bit later, maybe I retire at age 70. So now I retire at age 70, I actually was able to extend my money now until age 76. This is really helpful for you because you can make some adjustments and you'll notice my retirement score popped up 8 points just by changing my retirement age. So if you change the outcome, you'll be able to get a better understanding of where you are, what your odds of success are. The reason that you can focus on best, worst, or median case scenario is because we actually run this trial 1,000 times. Meaning that we're looking at your odds of success 1,000 times, and the best, median, and worst case scenario actually signals out of those 1,000 trials, what is the worst case 10% of the time, what is the best case 10% of the time, and then in the middle there, what happens. And using that philosophy or using that strategy, we're able to predict what the outcome is. Down here on this page, you're able to influence the inputs. So if you want to adjust any of your answers, you can do so right there. And then you just have to simulate the Monte Carlo. Now, if you go a little bit further down, you can see the model that's being filled in for you. So we start at your current age and the current year. We're looking at your income. How much money do you have coming in? How much of that are you spending? What are you contributing to your retirement? Of your retirement investments, how much is in stocks, how much is in bonds, how much is in cash, and then what is the portfolio value. And you notice that we have the expected portfolio and a simulated portfolio. The reason that we do this is that we want to introduce a variable, a randomness variable inside of the prediction. Meaning that we don't want to assume that things just go up year after year in a consistent manner because that's not how life is, right? Instead, what we want to do is we want to have a random input, a random shock in order to make our plan a little bit more durable. So every time you simulate that Monte Carlo, we're actually running a fresh 1,000 simulations for you in order to figure out what your odds of success are. So don't be shocked if you run this a few times and you notice that your expected portfolio value changes. The reason being is we're using actual historical returns based on stocks and bonds going back to 1929. So what you'll notice is that over time here, your portfolio value should change along with your income and your expenses all the way to the point of retirement. If you fast forward here into the retirement age, for me, I said that that is age 70. You'll notice that the screen is green here. That is to signify that we are in retirement. So in retirement, we're expecting to have $3.4 million based on the simulated portfolio, we only have $3 million. And my investment portfolio would be 50% stocks, 50% bonds at that point. This is just a first draft review of your finances, but it allows you to start thinking like a financial advisor, thinking like a professional, so that you have a better familiarity with what the inputs are and how to plan your future. But we're just getting started here with your pocket plan, because really what we need to do is go in and make sure that we are adding all the information necessary to build a good plan. And this is so helpful for you if you are going to be sharing this information with a financial advisor or with a spouse. And you'll want to go ahead and enter in your profile information here, and along with your identity, let's even put in a photo here. I'll use this one of Bennett because I like that one of him. There you go. And then you just hit finish, and now that will be uploaded. So now your financial advisor will be able to see you there. If you want to adjust any of your payments here, you can do that just using the billing section, and you'll be able to add a payment method or to change your plan. Remember, if you created a pocket plan based on an advisor link, then that advisor is sponsoring your subscription. So you don't have to worry about paying a monthly fee because your advisors pick that up. But if at any point you don't want that sponsorship, you just go in and change your plan and you can pay for it yourself. Now, under the financial info section, you have a few different tabs here. First is your connected accounts. This will reflect any financial accounts that you have already added into Pocket Plan. So let's go ahead and start by adding in some accounts. To do so, I just have to click the plus button, and then we have to find the bank that we bank with. Let's say that we bank with Navy Federal. And for this example, we're just going to use a Sandbox data, and we're going to go out to the institution. We're going to connect with them so that we can take a snapshot of your financial information. We're not storing your username and password. We're just taking a snapshot of what the account inputs look like. To get the best results from Pocket Plan, you want to add in at least 3 accounts. You want to add in at least your bank account, your credit card or an auto loan, and then also a retirement account. And you'll understand why that's so important here in just a minute. So in order to follow through on that, we're going to add in a credit card, let's just say from Chase. And you're going to go through the same process each time. If you have multi-factor authentication, that will pop up here and you'll be able to add that in. And then finally, let's add in a retirement account. So let's add in a Guardian 401k. Oh, now some 401k plans are not available, or if you can add them in, you may see that not all of the information comes through. If that happens, don't worry about it. We may be able to help you out with getting all of the investments and all the information carried over as soon as it's connected. So now I've connected in my bank account, I've connected in my credit card, and I have my retirement account all listed. At any point, if I want to disconnect an account, I realize that, hey, I don't need that account in here for the financial plan, then you just hit delete. Once you have deleted the account, that is no longer connected with Pocket Plan, meaning that you will not have any information feeding in to Pocket Plan. So let me go ahead and add a new account back in here. And we're going to continue. And this time we'll say Capital One. And we're going out to the institution and we're connecting. That'll update every time that you log in. Now what I've done is gone over to the assets on the left side, and you'll notice that you have assets that are automatically categorized for you. What we do is we classify all of the assets in your accounts based on their type. So inside of your checking account, we're adding that money into cash. If you had a brokerage account, you'd individual stock trading account, you'd see that value listed here. Any HSA, annuities, 529 will be listed here. you can go ahead and add in a value of your residence or any other property that you have. And then any money in a 401k or an IRA is going to be listed under retirement. You'll want to add in for your house, your personal information as well as your spouse's information. And so that might be all in one account, or it might be multiple accounts. But you notice here that now my credit cards are categorized, as are my auto loans, and my mortgage is all categorized. I've also got a income feature here. Now, this is helpful for you putting in your income and then also planning out your Social Security income. When you add in your Social Security income, we're going to take that into account into your pocket plan. So you'll notice that your retirement projection gets a lot better just because you've added in that Social Security income. If you don't know how to get that information, don't worry. I'll leave a resource so that you can figure out how to do so. So you'll want to add in the annual income. You'll also want to choose your marriage, your tax filing status. We are going to make a projection on your effective tax rate to give you an idea of how much of your money is going to taxes there. And then if you own a business, make sure you tell us that, or if you have some company stock, make sure that you tell us that as well, so that we take that into account into your plan. Next, we want to look at your insurance. This is going to cover your property insurance, your health insurance, your long-term care, your life insurance. All of that will be input here. And then finally, your estate plan is going to be organized inside of your pocket plan. So your power of attorney, any will that you have, an advanced medical directive, all of that information can be stored here. We don't need the specific documents, but if you can give us the contact information, then we can check that off to say your pocket plan is complete. So you want to make sure that you have that. And if you don't have it, don't worry about it, because that's what this is for, is to build a list of things that you can do to improve your financial situation. So now I've set up my personal profile. I've added in all of my financial information here. Now let's take a look at the reports that are available through Pocket Plan. The first one that we have is our cash flow report. And our cash flow report is our budget. It just shows money coming in and money coming out. You'll notice at a high level, here's the money that's coming in. Here's the money that's going out. And then we've categorized the expenses by type. Your expenses are either essential expenses like your home, your loans, any sort of insurance. Those are all going to be essential expenses. Your non-essential expenses are shopping, eating out, fast food, bars, anything that is not necessarily a requirement, then that is going to be tagged as non-essential. And then your savings would be any contribution to a retirement account or money that was not used for expenses. So you'll notice here that we can go in and we can sort out what type of expenses we have. So our non-essential expenses include our restaurants, eating out on credit cards, taxi, coffee shop. Those are areas where if we said, hey, you need to save a little bit more money, we'd probably start there. Next, we have your savings. This is going to reflect any deposits that you have. And then finally, we have your essential expenses, and you notice that those are all listed there. On the other side, we have income that's come in, and then any savings contributions, you'll see those as well. So this is your cash flow report. It's very helpful for you to get a high-level overview of where your money is coming from and where it is going. You can adjust the time period to go back and look at any specific amount of time there. It will take some time to update if you go back more than a year, because we have to pull in that information. The next report that we have for you is called the net worth report, or the balance sheet. Your net worth report is going to list all of your assets on one side and all of your liabilities on the other. And once we have added those two together, we have your net worth. And in this example, we have a negative net worth because I haven't added in the property value. But you'll notice here that we have a minus 160,504 net worth. Well, we have a clear list now of all of our assets. So you see our checking, our savings, our IRA, our 401k, our money market account, all listed here. And then our liabilities are listed here as well. And the institution, the type, and the subtype are all listed along with the value. Very helpful for getting a high-level overview of what your financial situation looks like and where all of your accounts are listed. The investment report is where you're going to see any accounts that have investment securities listed. So a 401k, an IRA, a Roth IRA are all going to be included here in the investment report. On the first tab, we just have an overview just to get an idea of where all of the accounts are. And then we actually look at the allocation of the portfolio as a whole. So you can choose all of these or just one of them in order to look at the total allocation. The reason that we wanted to do this is, and that we thought it was important, was that we want you to make investment decisions with the big picture in mind. Too often we see a husband doing something separate than the wife, and they aren't aligned or communicating. With the big picture, we can get a better sense of where we are as a household and make sure that we're well positioned for meeting our goals. You'll notice that we categorize the investments as cash, equities, mutual funds, ETFs, and derivatives. So if we look on the left side here, you'll notice the ticker, and that's telling you, what the fund is, the value of that, and then what the type is. So really helpful. Now, if you're getting ready to go meet with somebody, or maybe you're just going to have a conversation with a spouse, you may want to print off the report here in order to have a physical copy. I like setting this up for looking at things on a weekly basis so that I'm able to just make sure that I'm keeping the eye on the big picture. It'll take you a few seconds in order to print out the report, but when you do, you'll notice that all of your information is listed right there. Really helpful for you to save, and I just use this to benchmark where I was at specific times. Very helpful on a monthly or a quarterly basis to benchmark where you were. So now we've added accounts. We have all of our financial reports created. We understand how to influence our retirement score. But maybe we want to dig a little bit deeper here and actually figure out how we can optimize our retirement. So what I'm going to do is run a scenario. A scenario is just a hypothetical. It's a what if, where I'm making some adjustments to different inputs inside of my retirement plan in order to see what the impact is. So you can change anything over here. I mean, you can change anything except for these areas that are shaded. I would advise you to start on this side with just changing your retirement age or how much money you want in retirement before you start tinkering with these. But I just lowered my income replacement rate, the amount of money that I want in retirement, from 85% of my current income down to 55% of my current income. And now what I'm going to do is I'm going to save my scenario. And whoa, look at that. Now you can see that my retirement score has jumped up pretty significantly. So what that tells me is that has improved my odds of success in retirement significantly now, because I've reduced how much money I need in retirement. So now I may need to save less in order to meet that goal. That's where you would want to speak with an advisor, is to, take action on that. At any point, you can adjust between the scenarios themselves. But if you decide, hey, I want to actually share this with an advisor, then all you have to do is find that advisor inside of Pocket Plan here, and you can connect with them. Once you connect with an advisor, they will have access to your Pocket Plan. So they'll be able to see your assets, your liabilities, your income, insurance, estate, all of your financial reports will all be listed and available to them. If you are not comfortable with sharing that information with them, do not connect your Pocket Plan with them. You should only connect that Pocket Plan once you're comfortable sharing that information with them. It's important to remember they are not giving you financial advice until you have signed a contract with them. Pocket Plan has just aggregated the information and connected you with those individuals. We are not making a prediction about your future. We are not giving you investment, tax, or legal advice, and we are not saying that you should use a particular advisor. Instead, what we're doing is giving you a forum to find these people who can help you with solving your financial problems. So if at any point you have questions, you can go right here to the help section, and you can find different articles, different tutorials in order to get some help. You can also just go ahead and click support, and you'll be able to enter your information there. So I hope that you found this video helpful. If you have any questions, you need some help, make sure that you reach out to us. You can either do so via email or phone. We're always available to help answer your questions. Thank you so much, and I look forward to seeing you on Pocket Plan. Take care.